Welcome to the Ricky Mathews Show from the STMM Digital Studio. I want to welcome you to this celebration of the people who are working so hard to make Mississippi such a great place to live, work, and play. And I just want to say that if you have digital needs and you're frustrated with your current digital efforts, STMM Digital is the digital marketing and advertising arm of SuperTalk Mississippi. I'm thrilled to have them as a sponsor of my studio, and I really encourage you to give them a call. I came from the digital media realm. I was the CEO of a very successful digital media company, and what SuperTalk has built is tremendous, and they can meet all your needs in the digital realm. Listen, as the tropics continue to heat up, we see lots of evidence that systems in the future may move into the Gulf of Mexico. I know that this is on everybody's mind, so we just have to wait and watch the situation. But with that always comes a concern about where are we with our insurance situation. And I've been talking about not just the National Flood Insurance Program, but also homeowner insurance. These are two very dynamic. They're different, but they share a common thread, and that is they have to be actuarially sound, at least the way they're currently structured. And there's trouble brewing, and it has to do with lots of things, including what's happening in the reinsurance market. And I thought I would invite my friend Frank Bordeaux, who's an insurance executive here in coastal Mississippi. He happens to also be the chair of the Mississippi GOP. And we're going to talk about the latest as it relates to insurance in coastal Mississippi. But before we go any further, let me welcome my friend Frank back to the show. How you doing?
Thank you for having me, Ricky. Excited to be on your show.
Well, look, you're actually not in Mississippi as we speak. Where are you right now?
I'm in Milwaukee, Wisconsin, at the Republican National Committee meeting. So prepared for a lively debate.
I'm curious about how things are going up there. So you're at the National Republican meeting, and I can only imagine this dynamic. I spent a lot of time in St. Paul, Minnesota, when I was training to be a publisher of Knight Ridder. And people kept encouraging me to drive over into Wisconsin to try to get a feel for that. One of the main things they wanted me to see was, I could stop anywhere out in the middle of nowhere in Wisconsin and go see shrines to Brett Favre and the Green Bay Packers. But it's a pretty place, isn't it?
It is beautiful. Milwaukee's a beautiful, clean city. They're really doing a great job in preparation of the convention. Huge investments being made here in Milwaukee, and I think it's going to be an unbelievable convention next year. So
what's the headline so far for you up there?
Well, it's been really all talk about the convention and the debate. They've added a few names to the debate. ISA made the debate last night about 9:30, and so it's going to be a lively debate. Obviously, the unknown is what is former President Trump wants to do. Is he going to show up or not show up? His son has just announced that he is going to be at the debate. So that adds a whole nother dynamic in multiple ways. So yeah. I wouldn't want to be the moderators of this debate, not knowing whether he's coming or not coming.
Yeah, woo, that's so dynamic. I've said this before, but I hope we get a good choice. And I think we have too many choices right now. So I hope that we can whittle it down rapidly and get to some viable alternatives. People always need alternatives. And let's have a debate about the issues in this country and quit talking about specific individuals. Let's talk about how we can build a better, safer United States of America, and I'm looking forward to getting there. I know you are too.
I'm definitely excited about it. I'm hoping that stays the narrative at the debate. I know we have a lot of candidates that want to talk about their policy issues, and I'm hoping that we're able to stick to that.
Hey, while we're on politics, let's bring it to Mississippi for a second. I had a wonderful visit with Lieutenant Governor Delbert Hosemann last week. And for people who haven't watched it, you can go to SuperTalk Gulf Coast or the Ricky Mathews Facebook page or YouTube, SuperTalk Mississippi YouTube page. I encourage you to go take a look at it because he didn't give me notes or bullet points before we have a conversation like that. And he let me go places that, the typical sort of politician or public servant would be a little bit uncomfortable with. And it was a terrific conversation. And we alluded to this and you and I have shared some notes about this as well. But it was a tough race, and now it's time to heal. And as the chairman of the GOP, I'm sure that's on your mind a lot these days.
We started the day after the election reaching out to all the different candidates that won and lost. We're a large, small town in Mississippi. We all know each other. And so coming together in Mississippi tends to be a little bit easier. Folks from both sides of the camp, Delbert's side and Chris's side, has reached out, and they want to know what they can do to be helpful to the party. So ultimately, I think we'll be able to come together, turn out the vote in November. That's our hope. And I know this isn't a political show, but that's what our hope is to bring everybody out.
Yeah, I mentioned this too before we started the show. Just the last comment is, and Michael Watson and I talked about this also last week, but gosh, man, our voter turnout is so disappointing. It's either people are worn out by the negativity and just decide they're not going to vote, or what they did. It's interesting that the state lieutenant governor, for example, the third candidate got so many votes, which I think was really a protest vote. But it's sad that so many people don't take more control. But with that said, I think we got another good dose of Mississippi voters, if presented with viable alternatives, can usually make a good choice. And I think we saw that across the board, didn't we?
I think we have really good House members, really good, the entire legislature. I think that we're going to have good legislators going up. We have great state leadership. And I'll be honest with you, this was a tough election. 2027 is going to be extremely tough because there is a deep bench, and we've continuously built a deep bench. That makes for a great party, but it also makes it difficult after elections. 2027 is going to be a really, really rough year.
It is. Just for people who need to hear specifically what he's talking about, you've got a Secretary of State in Michael Watson. You got a state auditor in Shad White. You've got a cadre of other leaders across this state that are most likely going to put their names in the hat. So, you're right. The bench, man, actually the bench, when you sit down and think about it, the bench for the Republican Party in Mississippi in terms of bright, up and coming, young, really good. And not all of them are young. Some are not young, but also incredibly focused and able. The bench is stronger than it's ever been, isn't it?
Yeah, no question about it. I mean, if you look throughout our state and folks that are contributing, not only folks that are currently elected, but some folks that are serving in agencies, and people from the private sector that are very engaged in the system. So I think, there's a long way between now and 2027, but you're going to see some real leaders emerge, and that's going to equate into some very tough races. And so if you know anybody that wants to be chairman of the Republican Party 2027, let me know.
It's a tough, I think, often thankless position, but for people, I know people who know you well, and you've done a masterful job of threading that really complicated needle. And primaries, there's not really a big time role for the chairman during a primary. I mean, your role is after the primary, when it's time to tell people to let's heal, let's bring this party together, let's do what's best for our beliefs and our values, and let's go forward. So we can't be divided in a general election. We just can't be. At least I'm sure that's what you're saying.
That's correct. We're stronger together.
Okay, well, let's shift gears now. Man, you and I have had lots of conversations about this, and we'll spend the rest of the show chatting about it. We can start with, what I don't want to do is rush through it, because we'll divide it out. We'll start with sort of homeowner coverage and what the sort of status of the market is, and then we'll go into quite some depth about the National Flood Insurance Program 2.0 and issues that we're having with it as well. But when you look at just a snapshot, I've been hearing from people, man, from all walks of life that are really struggling right now. Either they've been canceled, or their insurance carrier has just upped their rates dramatically. And they are really, because they've been paying attention to these conversations, I'm getting these notes, and I wish there's something I could do to help them, but I'm not in the insurance industry. But I don't see easy alternatives for them that are really super affordable. But those people that I'm hearing from, that is kind of the situation now, isn't it?
It is. And, January 1 reinsurance was a disaster, and it was really, really tough. July 1, you started seeing more capacity, which is, we really never had a capacity issue. Louisiana, Florida had major capacity issues where they just could not get it. But with the capacity increasing, I think that you're going to start seeing a little bit more competition. And another hat that I wear is on the wind pool board. And just anecdotally, we're not seeing the increase of policies on homeowners through the wind pool as we are on commercial properties. We're seeing
that's actually good news. Hey, when we come back, though, we're at the end of the segment. We'll talk about what is capacity. We'll make sure people understand what that is. That's really actually important to creating competition in the market. And we'll remind you, if maybe you forgot or maybe you don't know what the reinsurance market is and why it's so critical to insurers in coastal Mississippi and Mississippi for that matter. When we come back, we'll continue our conversation with insurance executive Frank Bordeaux. We'll see you after this. Welcome back to the Ricky Mathews Show. I have my friend Frank Bordeaux, someone I have a tremendous amount of respect for, significant leader in the insurance arena. He works at Cadence Bank and is an insurance executive there. And he works really, really hard to understand what the situation is, and he's really good at describing it. So we used a lot of buzzwords when we went into the break. So I want to make sure that the average person sort of understands some of these dynamics. When you start to break it down, the things that control insurance costs, once you understand what the words mean and what the different phrases are, it's not super complicated. So what I want to do is just kind of break it down just a little bit. So let's remind, we're going to cover several things that you just mentioned, Frank, but let's start with reinsurance, insurance for insurance companies. Explain to people why that's important.
Yeah, so every insurance carrier will go out and they'll go to London or Bermuda or Asia, and they will purchase reinsurance. And really, one of the issues that we're facing with is there's much fewer reinsurance carriers that are deploying reinsurance, which we call capacity, to the insurance carriers. And they're doing it at a cost that's about double what it was in 2022. And 2022 was about double what it was in 2021. So we're dealing with a 24-month increase that the insurance carriers are getting on their reinsurance. And that's what they will insure their book. And they'll take some of the risk, just as you do in your deductible on your homeowners, and then they lay everything off to the reinsurance carriers. When insurance carriers can't buy the reinsurance, or they can't get the capacity they had last year, obviously they're going to drop the amount of coverage that they're going to offer to the end user, and then they're going to put a price on that coverage. And so that's where we are right now. We're 24 months into a really rough cycle. We're in the worst of that rough cycle. By all indications, things are getting better than what they were at the first of the year. We'll see how the storm season pans out. If we go through the storm season relatively unscathed, I think that you're going to start seeing, you're not going to see the market flatten or go down. You're just going to see less dramatic increases. But one thing that they've learned, the insurance companies learned from Hurricane Ian, is the valuation was really, really off. The value of that storm was between 20 and 30 billion is what they estimated it to be by their models. What's ended up being about 130 billion dollar loss. And so that's a huge shock to the system from a valuation standpoint. So when you're talking to your agent, whether it's a commercial property or residential property, not only are you getting hit with extremely high premiums, but they're wanting to increase your values by a lot, which also increases your percentage deductible by a lot. And so it's, double, half. You're getting double the deductible for double the premium, and sometimes half the coverage. And that's very unfortunate. It's a very, very difficult market, unlike anything we saw after Katrina.
Okay, so and that nice job actually of describing that. And we'll talk about this term as it relates to the National Flood Insurance Program in just a second. But before we go too much further, explain why insurance companies are focused on being actuarially sound.
Well, the insurance companies, obviously they want to make a revenue, and typically they're going to write for a loss. They write with the idea that they're going to lose money, but they make their money off their investment income, which is a whole nother side of this thing, that they may not be getting their investment income. And so they want to write and make sure that they know that they are going to have losses, whether it's your auto insurance or your homeowners. They want to write right there for a small profit, but be able to make their money off their investment income. And that's been very difficult for them. Reinsurance carriers in London lost money 7 out of the past 10 years. The most they've ever gone in a stretch of losing money. They're not in the business of losing money. And so that's why we're seeing some of the things we're seeing. As far as actuarial sound, the insurance company can spread their actuarial risk they can choose whether they want to write 10 policies on the coast and 50 policies non-coastal. The difference between a regular insurance carrier and the National Flood Insurance Program was designed to cover flood risks that nobody else will cover. And we're encouraged for us to build in areas where we couldn't get coverage elsewhere. We are incentivized by the National Flood Insurance Program when they put it in place. And all of a sudden, now that they have these policies, they are taking losses, but they weren't buying reinsurance like a lot of folks. I often say if they treated the National Flood Insurance Program similar to what Mississippi did after Hurricane Katrina with the wind pool that we have, the National Flood Insurance Program would be in good shape. But it is a subsidy, and we have to understand that, and Congress has to understand it's a subsidy that they designed.
Yeah, it is definitely that. So as it relates to Hurricane Ian and the point about value, so if I own an insurance company and I've got so many policyholders which equal this amount of revenue, and this is sort of the way it is right now, one of the major factors in looking forward is to say, okay, do we have the homes that are there insured for enough money? This is the issue of what happened in Ian. Their losses were so much greater than what they anticipated, and so they're in the business of managing risk. So they're looking at the amount of policy revenue that's coming in. They're looking at valuation. They're looking at the cost of reinsurance, and they're doing all these things simultaneously, and they're trying to project out what's the impact going to be. And the less capacity we have, the less reinsurance capacity we have, the higher the rates are going to be. And the reality is that once you factor all this together, there is literally no way around the fact that our rates are not going to go up. Hopefully they're not going to be where they were right after Katrina. I mean, they skyrocketed and settled down. Do you ever think we're going to see that again?
We're there. If you look at my book of business, if you look at rates, we're right at Hurricane Katrina, in some cases worse, because the deductible situation is a lot worse. The valuation has caused deductibles to go up exponentially. And then your coverage forms have changed so much since 2006 to today, where you have a lot of roof exclusions, you have different ways that they're calculating deductibles for roofs. And so I really encourage people to look at their exclusions, read their policy, because in some cases there's some really, really bad language in some of these policies. In some of the endorsements that they're putting on sounds really great. It sounds like some folks from Washington actually drafted these. The title of them will be additional cat coverage. But then you look below and it'll say, except for these items, and it's everything that's excluded. And that's most things that would be covered in a storm. And so really read your policies, because unlike after Katrina, we're dealing with rate increases, which we dealt with after Katrina. We have massive deductibles. We have increases in valuation. And a lot of times the coverages just aren't as broad as what they were post-Katrina. Yeah,
it's interesting that you're making that point, that after Katrina, a lot of the rules were still the same, and we're just dealing with much higher deductibles. But what you're saying is now they've sort of designed a scenario where they're passing more of those risks onto the homeowner. So when you look at what the homeowner's risks are, and add that to what their premium is, and their obviously included in that is the higher deductible. I didn't consider that we're in a situation now that could rival with what we dealt with right after Katrina. And man, that was significant. I just know how it affected me personally, and it was very significant. And I thank God that in the years that follow, we saw rates start to come back down again. And what you said to me the last time, do you still feel this way, that if we could have things settle down for a couple of years, we could see things start to settle down again? It's really going to be about where catastrophe happens around the world and how much money it costs.
That's right. And one thing that we saw in July, hopefully we see again in October when more reinsurance is purchased. If we see more folks getting into the market in 2006, 2007, we saw the disaster of the market down here on the coast. 2008, you start seeing decreases. Warren Buffett jumped in the reinsurance market. We just saw that Warren Buffett last week looks like Berkshire is going to start participating a little bit more in reinsurance. We have to get more competition in reinsurance, more competition. People buy more capacity. Your carriers buy more capacity, and that will create. We saw 20% decreases 08, 09, 10, 11, 12. And so we need that competition in the marketplace, but we need the capacity to do that.
Well, and then you factor in they're trying to do some projecting on climate change and how that's affecting us, and I think
that's a big deal of what we're seeing with this valuation as well. And if you look at the models, they're modeling in a 10 or 15% loss for unknown or things that they didn't underwrite for. And a lot of that's climate change. And so they're putting that into their models, into their projected losses. And so I think once they correct their models, I think you're going to see them get stabilized.
Well, that's some good news, assuming we don't get hit hard somewhere in America by a major storm. When we come back on the other side, we'll continue this part of the conversation, and then we'll actually shift gears and talk a little bit more about the National Flood Insurance Program. We'll see you with Frank Bordeaux after this break. Welcome back to the Ricky Mathews Show. I've got my friend Frank Bordeaux. He's an insurance executive with Cadence Bank. Also happens to be chairman of the Mississippi GOP. But Frank, before we get started with where we left off, I just want to tell you that I've been noticing on my pier that I've got a couple of rotten boards, and Mike Arguelles is the guy who installed our pier initially. And I talked to him on the phone yesterday, and I said, man, I think I'm going to tackle replacing these boards. And he gave me some directions, and I went and bought the appropriate stuff. I got up before the sun woke up this morning and went out and started doing demolition. And it was quite a process, but I got I got the boards removed and replaced I haven't actually nailed them down yet, just before the show started. But man, it was hot outside, really hot outside. And it's going to be hot outside for, maybe the rest of the summer, but we're protected right now. And this is where I'm headed with this heat dome that's over us and all these weather experts that you have and your insurance industry have access to. Just got to scare you to death to think about the ridging backing down a little bit, the heat dome kind of coming off the coast, and a storm getting in the Gulf with record heat ocean content right now. Man, it could be a busy end of this August and a really, really busy September and October. You guys have to be concerned about that.
I look at the weather every morning and every night. My biggest fear is even if we get a moderate storm, with the limits of insurance that people are buying, that especially on the commercial side, that all they can afford, and the high deductibles, we're dealing with a complete different scenario from an insurance perspective after a major disaster than we were after Katrina. People had high limits, they had lower deductibles. This is going to be a large storm can be very devastating to our economy on the coast, and so it's something that our leaders really need to look at. This is not a Katrina scenario. It's far from it. They're commercial properties that are taking very low limits because that's all they can afford, and with large deductibles. So
and we saw, okay, the good, if there's a good news in all of this, unrelated to the insurance, but somewhat related to that because of requirements that they have, is that the rebuilding has been more fortified. We're higher. Hopefully we're in a much more resilient scenario where the damage is not as great. But I mean, if you have a major storm, you have a major storm, and that, with a major storm comes the catastrophic damage that just comes with that. You can't avoid that. But one of the biggest stories of Katrina was that we hadn't been hit like that since Camille. We had too much building that was low. It wasn't to a certain standard. So many homes and businesses were literally wiped away by storm surge or by the wind. And too many people were either not insured or underinsured. And hopefully the impact won't be comparable to Katrina, but you still worry about it, don't you?
I do. I mean, it scares me. But to your point, Hurricane Zeta hit, although it was a very fast storm, but it was a Category 3. And the damage, the insured losses that we had across our entire footprint were very, very minimal. I do believe that we built back stronger and better. And we use that as an example when I go to London and I talk about our book of business. This isn't the same school district or the same city or the same county that they are used to underwriting, that they had huge losses in Katrina. They built back much better, much higher inland. And so I think that we've done what we have to do to fortify. Obviously, I get nervous just from a valuation standpoint and a limit standpoint.
Yeah, it's it's not a matter of if this is going to be tested. It's just a matter of when, And what we don't need and what we don't want, and again, you don't want to wish ill on anybody, but just from an economic point of view, just from an insurance economic point of view, we don't need a Miami to get hit, and we don't need New Orleans to get hit again, and we don't need Tampa, for God's sake, to get hit. We don't need Houston to get a direct hit up Galveston Bay. I mean, again, I'm trying to think about the scale, the kind of scale of damage that would create a blip on the screen big time in insurance markets around the world. I mean, this is the kind, or you start thinking about up the East Coast, some of those potential situations. It's scary what could be, isn't it?
If Ian hit Tampa, we'd be having a whole different discussion right now. It wouldn't be whether that our insurance is too expensive. It's how do we get insurance?
Hey, listen, I said it on the show. I've got a brother-in-law who lives in Tampa. But when I was in New Orleans as the publisher of the newspaper there, I had a terrific reporter who focused on these issues, and he wrote a series about not only New Orleans, but Tampa as well. That Tampa, as you start looking at the worst-case scenarios for Tampa, my memory serves me correct, the average elevation is like 5 feet, and it is a storm surge magnet just like coastal Mississippi is. We're talking about mega impact. I mean, and look where Ian went in. I mean, Fort Myers and the surrounding areas, very significant impact. As you pointed out, over $100 billion in insurable impact. That's significant. Okay. I mean, but that literally would have paled in comparison to what we would have faced if it had gone into Tampa.
It pales in comparison. Their underwater topography mirrors ours almost exactly. And you've been to Tampa. If your listeners haven't been to Tampa, they have built some very expensive buildings right on the ground. They don't have the elevation that we've done since Katrina, and so it could be a massive problem. Yeah,
when you ride down a canal in Tampa, it's like the bayou here in Gulfport, for example, or somewhere along the Schuylkill River. But you do that there. It's sort of like in Fort Lauderdale. So it's kind of the same way. If you go into those canals off of Fort Lauderdale, you're shocked at how high the houses are not.
That's right.
Because they just haven't been. Of course, I know the East Coast is a slightly different situation, but still, if Fort Lauderdale gets a direct hit from a Category 4 or 5 large storm, again, the storm surge is relative. Instead of it being 20 feet high, maybe it's 12 feet. It doesn't matter. It's going to have tremendous impact. Those areas have not been tested in so long. I mean, so long since all this construction has taken place. And Tampa probably is the poster child for that, isn't it?
Without a question. Tampa scares the insurance industry worse than any place. And I will say, because of how we built back, insurance carriers, London is more apt to deploy their capacity to the Mississippi Gulf Coast than they would be to Tampa. They also know that how we've performed, and we do a constant reminder to domestic and foreign carriers, of how we've built back. And so we're not dealing with the issues and have not dealt with the issues that Louisiana and Florida have dealt with. Capacity came to us where they couldn't even get coverage. And so I believe that shows that what we did after Katrina was right. How we built back after Katrina was right. It hurts us right now, but all we got to do is talk to our friends and neighbors over in Louisiana, and it's hurting them much, much worse.
Yeah, I see that completely. And there's one other element to this, and then we'll move over to the national. By the way, there's probably 1,000 more elements to it, but one more we'll discuss today. And that is that you happen to be with Cadence Bank. So this is sort of a subsidiary of Cadence Bank that's in the insurance business that you have responsibilities for. But I bet banks also are deeply concerned about it because they require you to have insurance. And so you've got homeowner insurance, but they also know in the back of their head that person's insured, but their deductibles are high, and there could be some valuation issues with it. Banks have and mortgage companies have a big stake in all of this as well, because we may find ourselves in a scenario once again where people aren't able to cover those deductibles, and they find that they're underinsured again, and that these exclusions they didn't know about it are killers to their rebuilding. It's more than just insurance companies that have risk. It's the banks and mortgage companies as well, isn't it?
And I will say that the bankers and the realtors and the mortgage companies, when Bicker Waters passed in 2012, they led the way to get that fixed. They're very cognizant. Those three groups are very involved when it comes to insurance, and we can rely on them to help be a voice. Obviously, they can't do anything from the global insurance market, but from the NFIP standpoint and from the Mississippi Wind Pool standpoint, they aren't afraid to get loud and help us, drive our message at the national level.
Yeah, and they need to be louder. And as we'll be shifting gears in a second and talk about the National Flood Insurance Program, but everyone's got to get louder, because the conversations we're having nationally right now are not about solving problems like this. And this is kind of an economic disaster waiting to happen if we don't get our heads together around this. It's really important. One other point that I want to make is that as you think about Mississippi, and you've said this a couple of times, and we've talked about it on past shows, but I just want to remind people why this is so important. We're at the end of this segment, so what we'll do, we'll hit this on the other side, and then we'll give the headlines on National Flood Insurance Program. But I want to come back to the Mississippi Wind Pool and how we positioned the Mississippi Wind Pool after Hurricane Katrina is really a best practice in America, and something that, thank God we have it, and we'll explain why here in just a second. But we're having a conversation with insurance executive Frank Bordeaux, and we'll finish with the final segment after this next break. We'll see you after this. From the STMM Digital Studio right here on Biloxi's Back Bay, I'm thrilled to have my friend Frank Bordeaux joining us today, and we're having another conversation about the insurance challenges the world faces. It's not just coastal Mississippi. Everybody faces challenges around insurance, and there's always going to be a lot of work going on the part of insurance companies to manage their risks. And when they do that, usually it means our rates are going to go up. But when you have capacity, that means there's more people writing reinsurance. You have more competition. That can help our rates come down. So it's a dynamic world that we're in. One thing Mississippi did great after Hurricane Katrina, though, is it created a really solid wind pool that still today is a best practice in America, isn't it?
No question about it. Our wind pool is... They've been very, very conservative, and they stand alone from the legislature has done a very good job of letting the wind pool do what the wind pool does. There's a significant amount of money, almost $400 million, that we have built in our reserve fund, and that would be very tempting for a legislator to go to grab it. But our coast delegation has just been steadfast of that money staying over there. And it's times like this that it's very important. And so we really created 4 buckets of protection. The 4th bucket is not the bucket we want to get to, but unlike other states, we have our money and reserves that we have. We buy reinsurance. So we buy about $550 million in reinsurance. Because of the repopulation of the program, this week, we're probably going to make a decision to buy some more reinsurance. And so that reinsurance will protect the carriers, because the next backstop, the next bucket, that's 2 buckets. The next bucket is the actual admitted carriers that write in our state would get an assessed what goes above $550 million. And then, or actually about $750 million. And then it goes on to the policyholders across the state. And so we have a very strong program before it gets to the taxpayer. And because we've protected that money in a very difficult and very good times by buying more reinsurance and buying our deductible down when it was cheap, now when it's very expensive, we're able to assume more risk and buy less limits than what we normally would want to, but we have that money to protect us. And so that's where you're seeing a lot of the issues in other states. They didn't do that. That's why you see a lot of issues in the National Flood Insurance Program. If they run on a surplus, Congress takes that surplus. And they did not buy reinsurance until probably 4 or 5 years ago. And so,
yeah, I mean, hey, don't fool yourself. And you pointed this out, that with $400 million sitting over there in a pot, you don't think for a second the legislature doesn't want to go dabble in that. I mean, they even tried to this past year. So it's something we got to be aware of. National Flood Insurance Program, we talked about it many times. People continue to have sticker shock. If you live in the home that you've lived in since Katrina, you're seeing your rates go up every year. You've got a target rate that goes with that. If you were grandfathered in before, you're not grandfathered in now. The rates are going sky high. When do you think the national conversation is going to crank back up about this? I mean, because it's kind of quiet right now, and it shouldn't be.
Well, Mississippi has joined several states in a lawsuit with the NFIP. I believe that Commissioner Cheney is going to join General Fitch in that lawsuit. I think that we really need to, in our delegation, in Louisiana delegation, they get it. We're getting hit the worst out of this because we did have the devastation of Katrina, and we spent literally probably hundreds of billions of dollars, you, myself, other folks, elevating and living by the rules that they set at that time, where they're going to determine premiums based on a flood zone and an elevation. Well, all of a sudden, Risk Meter 2.0 comes out, and that's kind of out of the window. They require the communities to demand us to build to the elevation, but when it comes to the rating, it's less about elevation and more about distance to water. And so it's very, very punitive for the Mississippi Gulf Coast and those that rebuilt both commercial and residential on the coast, as well as Louisiana. You are starting to see their mapping process. And when we passed the Affordable Flood Act, one of the things that we required legislatively was they need to map the rest of the country prior to them, because they're not truly getting an actuarial rate whenever we're carrying the brunt of the actuarial rate until they start mapping. And in Jackson, they just finished their maps. And for the first time, a lot of folks that live on the reservoir are having to buy flood insurance required by their bank because they're now in AE zone. And so it's changing, but what's very frustrating this time is this was an administrative action. And I'll say it multiple times. Congress didn't vote on this on 2.0. This was the administration that put it in place. And we need Congress to, when they have the reauthorization, to go back and fix some of the things. Grandfathering has to come back in, at least until the entire rest of the country is mapped.
Yeah.
Until they can put everybody in a flood zone, and that way it's an equal playing field.
Well, it's not only an equal playing field, but you're spreading the risk. I mean, we got to have, you got to spread the risk. We are on the receiving end of that. And sandy communities, are the same scenario. Some in Florida, the same scenario. So we just all got to keep, and some in Texas as well. So we just got to keep joined together and fighting this. And hopefully we can make it. Biden with one administrative move could change the course of history on this, at least temporarily, but he hasn't done it, and don't plan. There's no indication he's going to. Frank Bordeaux, it's been good to visit with you, my friend.
Thank you for having me, Ricky.
Yeah, safe travels home from your meeting up there. We'll see you soon.